What up, everybody? Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made my mission to help you guys own it. It's been a wild day today, another volatile one for sure, but the Dow has really kind of been the story as far as the stock market's concerned. The S&P is still red, it's down 1/3%. The Dow's up almost 1%. It's up 267 points. Tech is still getting hammered. That's down 154 points. No thanks to Meta Platforms that it just got absolutely hammered yesterday in earnings. We can talk about that a little bit, but I think that again, nothing changes as far as my stance is concerned on Meta. I still think that there's a lot of investors out there that are looking at this without a zero open mind at all, like no open mind with this as far as the metaverse is concerned. I don't think that I don't know. I think a lot of people are really worried about what the metaverse is and where it's going. And all I can say is remember that time when the internet was going to last as long as the fax machine. And I think that we're having that same kind of conversation today. Web3, all that stuff, it's going to stick around. It's not going anywhere, guys. I'd hate to break it to you. It's here to stay. That being said, we do have earnings today that we're going to be reacting to. Amazon's earnings, Apple, Intel, First Solar, T-Mobile, and an array of other ones. So make sure that you guys are putting them in the chat if I didn't mention yours. But there is a ton of earnings, and I'd be happy to cover those and react to them as they come in. I'll give you a breakdown on a few of those before the bell, just to kind of give my perspective on what to expect. But before I get into anything else, I want to shout out my starting five. I see you, Bodie Bear. What up? What up, bro? Philip Stroh, Kevin Hawthorne, Karem, and Lindsay Heist. You guys are on my starting five. If you guys missed out on the starting five, it could be because you're not subscribed or hit that notification bell and shown up first. So you got to do that. You have to subscribe, hit that notification bell to get notified when I go live every day at 3:45 p.m. Eastern time, and then show up early. You just might show up on the starting five. Okay, so as I'd mentioned, we do have some earnings that we're going to be reacting to. Just before I get into any of those, I see a few of you chiming in here. Mike S says the metaverse will be great in 2035. I think it'll be great a lot sooner than you think. Augmented reality is better than virtual reality. I believe the metaverse is kind of a mixture of both. But yeah. For sure, augmented reality is better. And listen, hey, Meta's actually doing that with the Oculus. Check out the new one. Do some research on that. Not to say that you didn't, but just do some research if you guys haven't checked it out. It's looks dope. Cinestyle says, I want some cheap shares. Let's get a miss from Apple, miss from Amazon, and a miss from Intel. Oh man, he just wants everything to go down. John P says the Mullen test drive is today. Yeah, so Mullen had a relatively flat day. It's down. It was a little bit all over the place. It's down like 0.5%. No big deal. It's really not doing anything. But the big card tour today took place. I haven't seen much from Mullen as far as their social media is concerned, but I did catch a couple of stuff here. I can show you what I found and what some friends shared with me on what they found. And one of them was just this. It's just a simple rolling, five. It's a Mullen 5 just rolling down the parking lot here in a closed course, of course. Every time, the more I look at this now, though, the more that it kind of reminds me of a Ford Mach-E. It's kind of like a sleeker version of the Ford Mach-E, but it's okay. It, like I said, as far as the way that it looks, it's just, to me, I understand the practicality and why this will probably do very well. I think just for me, it's like I'm not a big SUV guy, with the exception of the Bollinger ones. Those models, I can't wait for them to come out. But yeah, looks pretty dope. Rocket Picker says looks quality. A couple other ones I saw. Yeah, this is the Mullen 5 Black Edition. I'll show this one to you guys as well. Let's see if I can pull that up. There we go. Here's the Mullen 5 Black Edition. Someone shared on YouTube. So like I said, it's like it's pretty sleek, pretty cool looking. This is, I guess, kind of like that murdered out look, so to speak. Looks good. Looks good. I'm just waiting for them to actually share more stuff on the 5. They haven't done so yet. So we'll just wait. I think it's, sorry about that. I think it's probably why the stock is kind of just been a bit flat, but we'll see. You know what hasn't been flat? It's been Doge. I saw somebody, I think it was who else was it? It was a Karem. Yeah. Will Doge be the official crypto of Twitter? Well, I think there's a lot of people that think so because Doge right now is the only crypto. Well, I won't say the only one. It's one of the only major mainstream cryptocurrencies that is actually up. It was up as much as 15%. This is your 5-minute chart on Doge. We saw Elon Musk. If you guys didn't get a chance to see on his Twitter, he is now at the Twitter uh, headquarters, and he actually put out a statement. I'm not going to read the whole entire thing, but basically, he was clearing up some stuff, and I can just show it to you. He was clearing up some stuff when it came to the advertising side of Twitter. Let's take a look at this real quick. So, you wanted to reach out personally to share motivation on acquiring Twitter. He talked about it being a town square. And actually, he debunked a couple of things. Where was this that I wanted to kind of show you? So he said the reason I acquired Twitter was because it was important for future civilization to have common digital town square. Wide range of beliefs can be debated in a healthy manner without resorting to violence. And I think that there was a lot of people that thought that, Twitter was going to go to being that a free for all. He said Twitter obviously cannot become a free for all hellscape where anything can be said with no consequences. I know there's a lot of people that mentioned that the floodgates were going to be open. Anybody who got banned was going to be allowed back, and it was going to be a free for all. And it seems as if that's not going to be the case. And Elon never really actually said that was going to be the case. I think people just assumed that it was going to be. But as he takes it private, it's going to be interesting to see how he creates relationships with certain advertisers and how the company is going to make money. But we'll see. We'll see. All right. Perfect. All right. So, guys, as I had mentioned, we have Apple that has earnings today, and this is going to be interesting. So, one of the key things that I think probably is going to be in focus on Apple, and I'll pull up Apple's chart here. Let's take a look. Boom. There you go. So here's Apple right now, and this is your 5-minute chart again on Apple. We'll just see. It's not having a great day. It's just moving down, and I think it's just all been influenced by Meta Platforms. Obviously, had a really tough earnings yesterday. We reacted to that. It just wasn't pretty. The only thing that they really had good going for them was the growth. The daily active users, monthly active users was all great. That was the social media side, right? Apple's going to be a whole different ball game, and one of the big focuses are the foreign currency exchange rates and how they've been affecting tech in general. They've been affecting them a ton. Reports that the company is already cutting production of its new iPhone 14 Plus and adding some degree of uncertainty to what Apple will say about its outlook during what is already always the biggest sales period of any year, and that is Q4, Christmas, holiday season. Wall Street analysts currently estimate Apple will report a profit of $1.27 a share on revenue of $88.8 billion for the quarter. And that ended September on 30th. That was the third quarter. In that same period a year ago, Apple earned $1.24 a share on $83.4 billion in sales. Now, this is going to be something that I think will be interesting to watch. Can Apple overcome the onslaught of what we've seen from a lot of the tech stocks? I don't know. I mean, Apple always sandbags their shit anyway. They always sandbag. They just do. There's no way around that. Whenever they give guidance, and listen, you're the biggest company in the world. You have to. You can't just give these lofty expectations and hope to beat them. Apple has to always beat, and they will. I'm not concerned about that. I'm more concerned about their guidance. This is your 5-minute chart. We're getting ready into to go into the close here. And of course, we'll be reacting to them as those earnings get released. There are other ones that are going to be released as well. And one of the other big ones, of course, is Amazon. That stock right now also trading down around 4%, just getting crushed. Meta Platforms not doing any of these stocks any favors. But there was a couple of things I wanted to mention. Canaccord Genuity advised clients on Sunday that consumer spending has softened over recent months, and investors will be looking for further discussion of the macro backdrop and companies positioning ahead of the holiday season. Can Amazon make the move here? Now, I think that this is interesting. The firm nonetheless thinks that Q3 results will likely be solid and aided by in part by a strong Prime Day. But the e-commerce part is only a small fraction of what Amazon actually is. The AWS side is definitely going to be interesting to see, because we saw that Microsoft's Azure platform actually slowed in growth as well. Now, a lot of people don't pay attention to AWS because it's like, oh, well, it always does well. But if it doesn't this time around, if it reports the similar outcome or outlook as Microsoft did, I would imagine that Amazon goes down much further than the 4% that we're seeing it today. So keep an eye on that one. Then we have Intel. Now, this has been interesting. The semis moved pretty considerably yesterday after hours, and actually had a halfway decent today, unless your name is Intel. Intel has earnings today, and it's down 4%. Why did the semiconductors move today? Well, one big reason was because in that Meta Platforms report, they talked about CapEx spend on data centers, and NVIDIA and AMD are going all in on that shit. And we saw NVIDIA up as much as around 5%. I think it might be up more than that. Let's check out NVIDIA right now, actually. But no love. It's only up around 2% now, but it shot up around 4 or 5%. You can see this morning, and then it got really volatile. But CapEx spend for Meta Platforms on the data center side of things, obviously contributing to the move here. But Intel, no love for that company there as far as that's concerned. We'll see what they have to say on their earnings. Now, their estimated earnings per share are 33 cents, $15.31 billion in revenue. Not one upward revision from any analysts or institutions, which is kind of just tells you the whole story there. Then we have First Solar. We got about 2 minutes before the close of the bell here. We have First Solar. Anybody interested? This is no, not Flowserve. FSLR. Thank you. FSLR is the ticker for First Solar. That stock is flat on the day. Obviously, it looks like it's been pretty volatile with the rest of the market. But this one, in my opinion, obviously is one to certainly watch out for. I think that First Solar could end up having a halfway decent day. They had some news yesterday that I thought was worth just mentioning. They signed a supply agreement with Swift Current Energy for thin film solar modules. They're going to supply Swift Current with 2 gigawatts of high performance, responsibly produced thin film solar modules in 2025 and 2026. Obviously, that's a ways off, but that is a huge deal, in my opinion. The agreements mark Swift Current's second gigawatt plus order for First Solar modules. So that partnership is continuing to strengthen. Today's earnings are expected to be around a loss of 24 cents. 747.97 million is also the revenue there. And analysts, Wall Street, they're pretty split on this. But I will say the stock is up 47% year to date. I don't think that this is one of those cases. You guys heard me talking about this all year long, that the most sensitive stocks are going to be the ones that report a loss or operate for a loss, unless you're in energy, because the energy sector is continuing to rock and roll. I mean, we saw Enphase earlier this week. I believe it was Tuesday, I think. We saw Enphase just absolutely crush it. I think First Solar has the ability to do the same thing, not quite to the degree that Enphase does, just because Enphase is profitable and they are just growing like crazy. They're doing everything right. I think First Solar is doing some things right, but obviously they need to get on the profit. They need to get on the profit train in order for them to really do well. But listen, you can't complain about 48% year to date when the overall stock market S&P has been down 25 plus. So those are the main stocks that I'm covering today. T-Mobile, yes, also reporting earnings. Let's see here on T-Mobile. I'll be sure to cover them as well. TMUS is the ticker symbol there for T-Mobile as we just got into the close. That stock year to date. Whoops. TMUS. There we go. That stock year to date is up 22, almost 23%. Actually, one of the better performers in the telecom space. Verizon and AT&T have not done well at all, but T-Mobile has. They're crushing it. So this has been a really great stock to hang on to. You know what's crazy about them? It's trading at 68 times next year's earnings, according to Seeking Alpha. That's expensive AF. Estimated earnings per share is 50 cents, $19.98 billion in revenue is the expectation there. Buddy Beard says Verizon is trash right now. Both Verizon and AT&T have just been absolute dogs. But hey, dividend still comes in, so I guess that's something. All right, going into the 5-minute chart here, I'm gonna track some of these other stocks here. Amazon's getting absolutely hammered, now down 10.5%, and that's after it was already down 4% today. So obviously not looking great for them. Yikes. All right, as soon as I have those numbers, I will be happy to share them with you. Guys, before I get into the numbers here, make sure you're hitting that subscribe button, hit that like button as well if you're enjoying the stream so far. I certainly would appreciate also if you're interested in looking for a media outlet for all of your stock news, check out Seeking Alpha. They have an amazing platform, and you can get 50% off your annual membership over there at Seeking Alpha just by being a viewer here and a subscriber of the channel. Click the links down in the description below. You get 50% off of your annual subscription to Seeking Alpha. They do sponsor the channel, so shout out to Seeking Alpha. We certainly appreciate it over here on the Chaos. Also, check out the Patreon. The link is attached in the chat. Would love to have you guys hang out with me in Patreon each and every day. It's great. You can be a part of the Discord. I put out videos all the time. I do Stock Watch Sunday, which, by the way, we're crushing that this week already. So it's all good things. Go check me out. Help support the channel over at patreon.com/ownthechaos. I really would love you guys to be there and be a part of the crew. Amazon's still getting hammered here. It's now down 18, 19%. Jesus Christ. All right. So let's see. I'm pulling some numbers here. They came in 28%, 28 cents per share. Revenue came in 127.1 billion versus 127.46. So they missed on revenue, and it looks like they may have missed on earnings per share. 21 cents was the expectation. 28 cents was what the actual was, but they're still getting hammered right now. It's down 19% after hours. Jesus. It's about to blow through 90 right now. Look at this. Let me zoom in here so you guys can get a better idea. Look at this. This is your 5-minute candle right now. Amazon getting hammered. It came all the way down to 87.54. Now trying to claw its way back a little bit, but it was down over 20% at one point. Looks like they're guiding down. So the Q4 guidance, 140 to 148 billion versus 157 billion that was expected for Q4. That is the busiest quarter of the year. That is why Amazon is getting crushed right now. So they came in and actually missed on revenue. Again, the expectation for revenue was 127.1 billion versus the 127.9 billion that was expected. They came in and beat on earnings per share, though, which I find interesting, and not by a little bit either. They came in at 28 cents per share. On the expected was 23 cents per share. So they actually beat pretty handily, but none of that matters because guidance is always king here, and the guidance is what's absolutely crushing this stock right now. As I'd mentioned, 140 to 148 billion dollars for Q4, and it looks like versus 157 that was expected. Jesus, stock is getting absolutely hammered. Absolutely hammered. Tammy J asking about Amazon. Do you think this is a good entry point for long term? Tammy, I guess it kind of depends on, by the way, Tammy, it's so good to see you in here. Tammy's been a long time. She's an OG. Literally since day one, I believe Tammy has been following me. So I appreciate you. But do I think this is a good entry point? It's tough. Let's take a look at this real quick as we'll get into some of the other earnings because I don't want to spend too much time on Amazon. There's plenty of other ones that we need to address, but I will answer this question real quick because Tammy asked it. Okay. That is why I'm getting because the OGs sometimes just deserve a little extra love. I'm sure everybody can understand. Let's take a look at the weekly chart here real quick on Amazon. So right now it's trading at $91 a share. If I was looking at Amazon for the next 10 years, I would look at $91 a share and be like, it's going to be way higher than that more than likely. So I'll take a shot at Amazon here. If I have a 12-month horizon, I would say, hey, let's see what happens when it gets down to 81 bucks. Here's your weekly chart. As I'd mentioned again, $81. This is a resistance that we saw back in 2018, March of 2018. It looks like we saw it a little bit more in March and April of 2018. We saw that obviously that moved down back towards the end of 2018, beginning of 2019. And then, of course, 2020 is right here. So the 2020 low was at $81. We saw resistance in 2018 at $81. So I think that Amazon has the ability, especially given this momentum down, to touch that $81 support. So that's where I think that we could certainly look at it. Right now, it's blown below all of its other supports. I don't see any other support until 81. That's just my opinion. But Tammy, I would say I would wait. If it were me trading Amazon right now, I would give it some time to figure itself out. I think you could look at this another 2 or 3 days from now, and it may end up being lower. So that's my thoughts on this. 40 in the UK brought up a great point. We do have the Fed also coming in next week. I don't see that the Fed's going to be any less hawkish than they have been. So, which would also bring tech down. All right, let's check out some of the other ones. Apple right now is down 1.5%. I think this is probably, it looks like it's just off of Amazon's news. Apple usually reports a little bit later, so we'll return to that one. But if you guys are just tuning in, first of all, thanks for hanging out with me. I certainly appreciate it. Hit that thumbs up if you haven't done so already. Got about 250 of you hanging out with me in the stream. We're reacting to Amazon's earnings right now. Amazon beat on earnings per share, missed just slightly on revenue, but the real story here on Amazon and why it was down nearly 20% was because of guidance. They guided down far below what the revenue was expected for Q4. So that is not good news for Amazon. I'll return to those and return to Amazon in just a moment to see what other good tidbits of information I can dig up. But right now, Intel is actually moving up. Here's your 5-minute chart on Intel. That stock's now up 2%. Still got a ways to go to make up for today's losses. But listen, it's a green candle. We can take some solace in a green candle. Yeah, everybody likes a good green boner. Intel came in at 59 cents. The estimated was 34. So they nearly doubled expectations on profitability. Revenue came in at 15.3 billion versus the 15.43. So slight miss on revenue. Guidance here, 20 cents versus the 60-cent estimate. Whoa. Q4 2022. EPS guidance was at 20 cents versus the 60-cent estimate. Whoa. Yet the stock's still green. That's a bit of a shocker. Revenue is expected to come in at $14 to $15 billion. The estimate was at 16.3. This is very interesting. Why the hell is Intel up right now? When we just saw that Amazon came in and guided below what expectations were, and the stock here is still up. Is it so bad that it's good? Whereas everybody expecting this to be bad, and so they're looking at it as a glass half full type of thing. This is very interesting. A tale of two types of stocks here, guys. Amazon guides down, the stock gets crushed. Intel guides down, stock's green. It's up 2%. That is interesting. Yeah, I'll just repeat this again because I just went and grabbed a second source just to make sure that I wasn't reading this wrong. But earnings came in at 59 cents. The expectation was 33 cents. So maybe that's what's holding the stock up is the amount of profitability they had for this quarter, despite slowing of growth. Revenue came in at 15.3 versus the 15.4 that was expected. They see Q4 adjusted revenue 14 to 15 billion. The expectation was 16.29. That's Not good. They see fiscal year adjusted revenue of 63 to 64 billion. The previous was 65 to 68. So that's also below expectations. Yet the stock's moving up. And you have Amazon that's getting absolutely crushed on a very similar type of earnings report in regards to, guidance and that sort of thing. So I think the only thing that's actually really that much different is the profitability side. Again, that 59 cent to 33 cent expectation on profitability is probably what's holding this up. You got me, but Intel's up, guys, right now. Ganesh says Intel's only green in today's earnings. Yeah, this is crazy. This is crazy. It's still moving up. It's now up over 3%. Come back to Intel. Maybe there's some other news there that we just don't know about. I'm just looking in on Apple right now. Still no real movement on this. I think that this was in sympathy to Amazon because those numbers aren't out just yet. Let's take a look back into Amazon. If you guys are just tuning in, we reacted to those right out the gate, and it's still trading down big time, nearly 20% down off of a really big guidance miss. So Amazon just taking it on the chin right now. That is a sad candle. That's a real sad candle for Amazon. It's the week fourth quarter guidance here that we're looking at for Amazon and why it's down so much. It is just not pretty right now, guys. Not pretty at all. We can take a look at some other ones. Let's take a look at First Solar. That stock is now down 6.25%. That's a bit surprising. So First Solar Q3 earnings came in at a loss of 46 cents. They missed. 27 cents was the estimate. So they were expected to come in at a loss of 27 cents. They actually came in at a loss of 46. Sales came in at 629 million. They missed that as well. 744.35 was the expectation. So they missed on earnings per share. They also missed on revenue. And so no surprise, the stock's down around 7% after hours. Enphase is still king, guys. Let me take a look at some of the other numbers here. Let's just dig into the First Solar report here. Looks like they invested a lot of their capex into R&D. The new R&D center, this is what they're talking about here in their report. The new R&D center will be located near First Solar's existing Perrysburg manufacturing facility, covering an area of approximately 1.3 million square feet. It will feature a high-tech pilot manufacturing line, allowing for production of full-size prototypes of thin film and tandem PV models. Remember, I was talking about thin film and the Swift partnership there. First Solar also recently announced an investment of $1.2 billion in scaling production of American-made, responsibly produced solar modules, expanding the company's U.S. manufacturing footprint over 10 gigawatts by 2025. So they're just talking a little bit more about their growth story, but nevertheless, the quarter itself wasn't great. However, the stock seems to be trying to claw its way back here. It ended the day flat. It's down around 4.7%. It was down much further than that, around 8% on the reaction to this news, but it looks like it's trying to claw its way back here. As I'd mentioned, net sales are 629 million, missing the 744 mark. They also came in at a loss of 46 cents. The expectation was a loss of 27. 16.6 gigawatts of net bookings since prior earnings call. That's a ton. That could be why we're starting to see this maybe move up a little bit. Record expected module shipment backlog of over 58 gigawatts. They've reduced fiscal year 2022 earnings guidance primarily to reflect unforeseen logistics costs. That's not really that much of a surprise. Net sales for the third quarter were 629 million, as I'd mentioned, increase of 8 million from the prior quarter. Operating loss, third quarter was 68 million. Cash equivalents is restricted cash and marketable securities at the end of the third quarter remained at 1.9 billion. Okay, so there's First Solar. We'll see if that comes back. The growth is okay, but the real big story there, obviously, is earnings per share. That's a big miss on EPS and not great revenue either, based off of expectations. Okay, let's check back in with Intel real quick because that's one of the only green moves here. Now the stock is really moving up. It's now up almost 7%. Let me check back in with Intel. So Intel beat earnings handily. They beat earnings per share big time, and then missed on revenue and actually guided lower than expectations as well. I really have no idea why this is. I think really the big reason why this is moving up is because they are cutting costs. That's the only real explanation I can give you right now. CNBC, here's a piece from CNBC. They announced that part of their earnings report states that Intel plans up to a $10 billion in cost reduction and efficiency improvements over the next 3 years. Okay. The chipmaker also announced that in the quarter that they would make chips for MediaTek. Stock's now up 8.5%. Wow. As I'd mentioned, though, I mean, maybe this is part of it. 59 cents per share was the actual earnings per share. The expectation here was 32. And they came in, at 15.34 billion. So it actually beat slightly on revenue. 15.25 was expected. Overall, revenue declined 15% year over year for the quarter, which ended in October 1st. According to a statement in previous quarter, the revenue declined 22%. The company's net income at 1.02 was down from 6.82 billion in the year ago quarter. So I think this definitely is hey, the stock is so bad, this report actually looks good. If this was like in any kind of bull market, Intel would be in the shitter right now. Period. Period. All right, let's check out Pinterest right now. They are also reporting earnings today. That stock is up 15.5% and climbing, folks. God damn. Before I get into these earnings, also make sure that you guys hitting that subscribe, that like button. I certainly would appreciate it. If you haven't checked out my Patreon at patreon.com/ownthechaos, the link is attached to the chat. We'd love to have you guys in there. We have our Discord group in there. We also have I go put out a video every Sunday called Stock Watch Sunday, a list of stocks that I think are worth watching and mentioning, among many other things, portfolio reviews, and the like. If you guys want to be a part of that, I certainly would appreciate it. Make sure you're hitting that subscribe and like, and then go check me out on Patreon. We'd love to have you guys as a part of the crew. All right, so Pinterest came in with earnings per share of 11 cents, beating the expectations of 6 cents. Revenue came in at 685 million, beating expectations of 665. Monthly active users were flat on expectations of 445 million. So again, it's so bad it's good. They actually did better than all the other social media platforms. If you asked me, of all the social media tech companies that were reporting this week, would Pinterest be the best one out of the bunch? And I would say no. I would say no. But here we are. Pinterest is crushing it right now. The stock is still moving up. It's now up 18.3%. God damn. This is amazing. Let's see if I can find some more info on this. As we all know, with social media platforms that or just platforms, companies that have users in them, everybody looks towards the daily active users. They came in flat. They didn't lose users, but they didn't gain that many either. The real key was that they came in above expectations on revenue and earnings per share, despite not growing in their daily or monthly active users, which means that their annual revenue per user probably went up. This has been an interesting earnings afternoon, guys. Wow. Who would have thought? Who would have thought? I mean, yeah, Josh Ruler says Pinterest. I'm shocked by this. I have to say, be the last one that I would think that would have any kind of movement to it. All right, Apple doesn't look like it's moving yet on earnings. Let me just double check to make sure that they're not out, but I think this movement's probably more than likely in sympathy to Amazon so far. Sure, there's a lot of nervous. Yeah, no numbers on Apple just yet. I think Apple usually doesn't end up reporting until like 4:30 Eastern time, so probably have to wait on that one a little bit. Ivan Broski says Santa rally next few months. Don't worry. I don't know about that one. I don't think Santa's coming this year. I hope he does. But let me check in on some comments here, and I'll do a recap of some of the earnings that have already been reported. But David says, is FANG dead? I think this is a really interesting question. Meaning the FANG conglomerate, right? Facebook, Alphabet, Amazon, Netflix, which I think probably should be NVIDIA at this point, Google. Oh, shoot. Facebook, Apple, Amazon. Sorry, Netflix, Google. So are these all dead? No, they're not. They're not. Are the stocks going through it right now? Yes. Are the companies just fine? Absolutely. In my opinion, no. I don't think they're dead at all. Can they go lower? For sure. But I don't know. I don't think so. Ivan chiming back in with the Krampus rally. That's more like it. Man. But yeah, no, I don't think that they're dead. I think that we're just looking at, a period in time where it's just going to be rough for maybe another 3 to 6 months, and we could see a huge rally. I think that 2023, Don of the Don Fran Show talked about this. 2023, we could experience a real recession from the economic side, but stocks usually end up start to move back up before the recession actually gets realized. So if the markets are moving down now, we probably won't feel that until next year, which means stocks will most likely be up. If you look back in any recessionary period, 2008 is a great example of that. Everything crashed. We didn't actually feel it until 2009 and 2010, but the markets were already back up by then. I think that that's probably something similar to what we can see here. So I don't think that there's anything that I would say. I wouldn't say, get rid of your Apple, get rid of your Amazon, or any of that. And then if anything, if you have cash on the sidelines, I would be looking for opportunities to buy. Checking on an Apple right now, there is some movement. This is down around 2% already after already being down 3% on the day. That's in response to Amazon that came in and shit all over everybody when it came to their guidance. So Amazon, they actually beat on earnings per share, missed slightly on revenue, but the guidance was the real key kicker here. Guidance, they lowered their guidance significantly. So I think this is, gosh, as I'd mentioned, $81 on Amazon could be on the table here. We're sitting at 89, 88 right now. So blew right through that $90 mark. And so I think that this is something that certainly is worth taking a look at if you have a longer term approach. I'm not saying you should buy it right now or at all for that matter. But man, I think this is something that you just have to look at and think, well, they're not going anywhere, right? I mean, they're just not. So it's going to be a tough time for Amazon and some of the other big techs, but this is where the opportunity that you need to take advantage of, in my opinion, of course. I think Amazon has the ability to go down to 81, and that's probably where I would look at it and strongly think considering about buying a lot of it. First Solar, if you guys didn't catch this, they actually missed earnings badly. Now the stock's really starting to move down. It's down around 10%. They missed on earnings per share. They missed on revenue. They missed on earnings per share by a lot. They're growing, though, yet just can't seem to figure out how to make money off of anything. Looking at T-Mobile, that stock has moved quite a bit. If you guys haven't checked that out, let's take a look at this one. T-Mobile, one of the very few telecom companies that's absolutely crushing it this year and is green on the year too, by the way. They came in service revenues of $15.4 billion. They grew 4% year over year. If you guys recall, I had mentioned 50 cents per share and $19.98 billion in revenue was the expectation. Net income of $508 million and diluted EPS of 40 cents decreased year over year. Core adjusted EBITDA of $6.7 billion grew 11% year over year. Free cash flow of $2.1 billion. And the stock is green right now. It's up around 2.5%. 40 cents per share, estimated 38 cents, as I'd mentioned, 19.48 billion versus the 19.93. So they missed on revenue. They see Q4 adjusted gross margin of about 45%. The estimate was on 50%. They see fiscal year Guidance here 7.4 billion to 7.6. The expectation was 7.3 to 7.6, and that is why that stock is actually green right now. So the fiscal year guidance is up compared to what was expected, just slightly, but it's enough to keep the stock in the green for now. Checking back in on Amazon, and it's still getting hammered. God damn. Absolutely crushed right now. Checking back in. Daniel G says Amazon to 80, 75 at most. I'm saying 80, 81. I think 81 probably seems likely. Josh Schuler says Apple must be a miss. Insiders would have started buying by now. I wouldn't be so sure about that. Gabriel Navarro says Caterpillar has a strong day. That's one of the big reasons why the Dow was actually up today compared to the S&P and the NASDAQ. Amazon will be 81 by 5 p.m. Maybe. I'm not going to bet against that right now, getting the way that this thing's getting hammered. Daniel G says Amazon isn't going anywhere. If anything, it's a great place to buy. I only see Snap and maybe Meta in the long run. Yeah, I would agree with that. Alphabet, of course. Apple isn't really moving. I see a couple people talking about Apple moving. It's not. We're still waiting on those earnings numbers. If you guys are just tuning in, certainly hit that like button and subscribe if you're not subscribed already. And if you're visiting for the first time, welcome. My name's Brad. This is Own the Chaos. Each and every day, Monday through Thursday, I react to earnings that are going on most of the time, unless there's no earnings. And then I try to figure out some dumb shit to talk about so that we can all still get our fix, our live stream fix. If you guys aren't subscribed already, though, I certainly would appreciate it if you did and follow along with me. I go over and give my insights on all of this. And I like to say that I give pretty good feedback on all of this, all of the earnings that come out. I'm pretty quick about it. So if you guys are looking for the skinny on all these earnings that are coming out, this is your spot. This is your place. We certainly would appreciate it. Jeff Chocolate. Well, we're waiting for earnings for Apple. All right, Jeff, I'll throw you a bone. Would you play Gus Edwards tonight? I am playing Gus Edwards tonight. I have him in my lineup. So yes. Own the Chaos, invest in Gus Edwards at play tonight. Yes, it is very important. Thank me later. Thanks, Dennis Howard. I appreciate it, man. I appreciate it. All right. So we got about a couple minutes before Apple's earnings. Let me know where you guys are listening in from or you're watching from. Let's do a little bit of a roll call. Give me where you guys are watching from. I haven't done this in a while. If you guys don't know where I'm at, I am just north of Charlotte, North Carolina. Gus the Bus. Yeah, Gus Edwards ran all over last week against the Browns. First week back. All right, Dennis Howard, I see you. San Francisco. Jeff Ponicka in Chicago. Sean is in Austin, Texas. Minnesota, Fargo. Northeast Tennessee. MMT, you're not that far from me, man. Northeast Tennessee. Tammy's in LA. All right. I love this. I love this when people are chiming in. Atlanta, Georgia. Oh, Munich, Germany. I love that. Madrid. All over the world. This is amazing. I love this. We're awaiting those Apple earnings, guys. If you are wondering what the expectations are, the expectations for Apple are going to be $1.27, $88.77 billion in revenue. Interesting part about this is that there's only been 4 upward revisions for Apple from analysts and 20 downward revisions over the quarter. That is interesting as well. Right now, the stock is not down because of earnings. It's down because it's reacting to the abysmal guidance that Amazon gave. And so it's just moving in sympathy right now. So the official earnings for Apple are not out yet. They will be in just about 30 seconds or so. And actually, probably about 5-10 seconds. And I will give those numbers to you as soon as they come out. Chattanooga, Tennessee. Andy Cobb is from Chattanooga, Tennessee. Birmingham, Alabama. Alabama consciousness. Oh, here we go. Apple's now moving up. Pretty solid move here. It looks like it's about to go green, but very volatile. So those numbers are out right now. Looks like they may have beaten. Is anybody shocked by this? $1.29 versus the $1.27 that was expected. $90.15 billion versus the $88.9 billion that was expected. I told you guys, they always sandbag that shit. Stock is now moving redder than what what it previously was, and it's now down another 3.5% compared to the 3% that it was already down for the day, and still falling. It's now down over 4. Let's take a look and see what the guidance is. I think that's probably where we're going to see the biggest impact, as we saw with Amazon. Right, stock's now down another almost 5%. It'll get there. Just give it time. Operating income was at 2.5 billion versus the 4.9 year over year expected. That's not good. Those are some of your expectations. These are getting crushed right now. Apple, as I'd mentioned, $1.29 versus $1.26. They beat on revenue as well, 90.1 billion versus the 88.5 that was expected. iPhone revenue came in at 42.6 billion versus the 38.9 that was expected. Year over year versus 43.4. So that's not bad. Let's take a look at some other things. I have to imagine the guidance is what's really bringing this down. Very similar to what Amazon was, right? Stock's now down over 5%. Getting hammered. More tech blood in the streets. Taking a look at the conference or the earnings report here. I'm just trying to see where guidance might be. I'd imagine that's what's bringing the stock down, or maybe they didn't give any. That could be another reason why the stock is down, because everything else was up. They beat expectations on a lot of things. Okay. Still don't have. I don't think they actually gave guidance. That's probably why the stock is down. It's down over 5% right now, sitting at 137 after closing the day at 144, which, by the way, was also down a ton then. It was down 3%, and that's a lot for Apple. It's now down 5% after hours. Apple, as I'd mentioned, earnings per share $1.29 versus $1.26 that was expected, $90.15 billion versus the $88.64 that was expected. Q4 products revenue was at 70.96 versus the 69.4 billion. Greater China revenue, in case anybody was caring about this, 15.47 versus the 15.65 that was expected there. It looks like many Wall Street experts were expecting somewhere around $1.31, and they came in at $1.39. Could be another reason why this is selling off. But I don't see any guidance, and I'm wondering if that's the big reason as to why. Just checking in on more Apple news. Yeah, I think that what it is that it came up a little bit light on iPhone sales, and the services side of their business also kind of took a hit. Could be why the stock is down, but it's starting to claw its way back. It was down over 5%, now only down around 4%. That sounds crazy to me to say only 4%, but whatever. Revenue for iPhone came in at 42.63 versus the 43.21 billion estimated. That's up 9.67% year over year. MacBook revenue 11.51 billion versus a 9.36 billion estimated, up 25.39. So I don't understand. Somebody clip that. I feel like that's a good sound bit. To me, this actually wasn't bad. I think this is more of let's nitpick Apple right now, because you compare it to something like Amazon, and Apple's actually not doing too shabby at all. It looks like it wants to try to go back to green here, but we'll see. Now only down around 2%, and it's trying to go flip green here. We might have a green candle going right now. We'll see. Oh, come on now. Keep moving up. Apple's about to go flat. Are we going to go green here? That's what I was saying. Like everything looked pretty decent for on Apple's report. They beat in a lot of ways, and given the environment that we're in, that ain't bad at all. I don't know what Mr. Chuckles is actually referring to as far as this is concerned, but that just made me laugh. That's a good question. Bodie Beard asks, do you think tech stocks getting crushed will have any bearing on the Fed rate hikes? I don't think so. I don't think the Fed really deviates at all. I would be surprised if they came in lighter than what people are expecting, which is a 75-point rate hike. I think that if they come in lighter than 75 points, I would be very surprised. And I would I would be very surprised if they deviated from that. Just because if they're doing what they said they're doing and they're reacting to CPI data and the cost of everything, none of it's really come down. It's still up 8% year over year. And until something changes, I don't see how or why they would change. The market's doing exactly what they wanted it to, but I don't know if it's done enough yet. Michael Hanna says 50. Okay. By the way, Michael Hanna is one that who shared his portfolio within the Chaos Crew. I'll be reacting to that portfolio and sharing that with everybody. Well, not everybody within the crew on Sunday. Just give my perspective. Again, it's never advice, but just my own opinion and my reaction to it. So if you guys aren't a part of the crew and you want your portfolio reviewed by me, just to get my thoughts on it, hit the join button next to, hit the the link in the chat and come to patreon.com/ownthechaos. Would love to have you guys as part of the crew. But those are your Apple numbers. So Apple there's Apple and Intel. And T-Mobile's now still up 3.25%, still moving up. Surprisingly, Intel actually did well today. Last quarter, they did not. Last quarter, they got absolutely hammered. Yeah, stock's still up nearly 4%. What a crazy day. What a crazy day. Absolutely nuts. If you guys are just tuning in, Apple came in and did okay. Had an okay quarter. Not enough to get anybody really buying in on this thing. Services were down as far as that's concerned on the revenue side, but hey, it is what it is. That's nothing really kind of, I guess, came out and surprised me a whole lot, except for the guide down on Amazon. I mean, Amazon already got beat to shit because of all the other tech stocks that didn't do well leading up to this. Looking at this right now, it's down 18.5%, was down as much as 20. Wouldn't surprise me if we saw Amazon come down to $81, $80 a share. So that's going to do it for today's show, guys. Thanks so much. As you guys know, it's Thursday, so it'll be the last day of the week for the stream, but that's not where Own the Chaos ends. I'll be back tomorrow with our Chaos Crew. If you guys want to be a part of the crew, make sure you're hitting that join that button, the link in the chat. I can't talk today. The link in the chat at patreon.com/ownthechaos. Also go check out Seeking Alpha. Shout out to them for sponsoring the channel. You get half off your annual subscription just for watching today's show. The link's in the description if you guys want to be over there with Seeking Alpha. Great information over there. I use them every day. And that's going to do it for today's show. Thanks so much, guys. Hit your like button on the way out the door, and I'll see you next week. Have a great weekend.